announce Netflix Stock Outlook 2014, the second part, since I already announced the first one. And the first one I published it as Netflix Stock Outlook 2014, that you can find here in the video portal. So if you click on Netflix, you find here that I announced Netflix to continue being one of the best investment opportunities in the stock market. It is here, become a billionaire investing in Netflix Stock Outlook 2014. So I maintain the strong buy rating in Netflix, and bear in mind I'm not going to take too long here. I upgraded this stock to strong buy after betting on the crash, the collapse in Netflix, and I upgraded, as you all know, to strong buy. You find it in several case studies, $52.86, and I made that call even before that price was known in the stock market. So that was my personal target on the downside. And my personal target on the upside, as I announced in Netflix Stock Outlook 2014, it is $430. So what I've been doing here in 2014 is that I already closed entirely the long position Netflix. That is to say, in my opinion, the stock is not worth by far more than the $430. So I already addressed this in the past because meanwhile we saw some analysts upgrading Netflix, and we consider those obviously the scam calls in the stock market, since they were bearish at the bottom and now they are bullish in 2014 and probably beyond. So what I'm going to do here is to click on annotate and to record this, since I already announced it. As I repeat in the Netflix Stock Outlook that the stock had plenty of room to go to $430. So the stock, I'm going to type here, Netflix sold 100%, 430. And what I've been doing is for your information, to sell short the stock. Hold on a second. Sorry about that. With an average price so far $445. This is what I've been doing in Netflix. Always selling short, in fact, above 440. And not above or immediately at 430. So I've been informing people to wait for the stock to trade above 440 to sell short the stock. In fact, the stock already traded to $450 plus. So I'm going to click on upload, and let's wait for this so here I'm going to show you the short-term chart in Netflix. Okay, this is the short-term chart. You see here that stock traded basically to almost $460. So I have an average short position Netflix, the $445. Okay, that is the same price as in fact today the stock traded to $445 and closed, or this is the price, the closing price, 437. So I repeat that my outlook in 2014, there were plenty of profits to be made on long side up to $430. When the stock traded to 430, I announced that in my opinion the single best thing to do was to start closing the long position at 430 or above. And why? Because 430, it is the price target they announced in Netflix. Now you have to understand that obviously in a stock like this, you don't stop the train, a high momentum train, and in particular, you know that Netflix, along with Chipotle, they are the single best performers in the stock market and in the world, with returns above 1000%. You don't stop this the momentum or a train moving at very high speed just like that or overnight. Although that can happen, it is unlikely to happen overnight, because Netflix is not plug power. Okay, that is my opinion. Nevertheless, or having said this, I consider this stock no longer a strong buy. I cannot say that this is a bubble. What I consider that the valuation is stretched, and it is stretched because my upside, in other words, there was plenty of room, I repeat, to go from the 50 to 86 all the way up to 430. If you are willing to pay more than $430 for this, I consider that you are a sucker. And I consider not only that you are a sucker, as well as a fool, because you had to invest when this was a strong buy, and not then at $430 or above. So what I consider that Netflix at this point is more a kind of a sell, rather than a neutral or a buy or a strong buy. What also I consider is that in Netflix, for the first time, although this is not visible to you, and although the technical indicators, all of them, they remain bullish, what is not visible to you, or might not be visible, is that in my opinion the stock is starting to develop a negative divergence, and you should not ever fight against a potential negative divergence. And the potential negative divergence here can be seen precisely on the relative strength index. That is one of the simple technical indicators that one can use. And here you have this, okay? And this is the negative divergence that I'm referring to. So I'm going to maintain the short position in Netflix. Obviously, I'm not interested, or it has not been ever my interest to predict the tops and bottoms, although that has been always the case. But what I'm saying is that based on the vast accumulated profits in Netflix, I don't give a shit, in other words, whether the 460 or 450 or 440 or whatever it is the top or not in Netflix. What I consider is that this stock had room to go to be one of the best investments in the world, from 50 to 86 all the way up to 430. If you are paying more than 430 for this stock, you are a sucker. That is what I said, and therefore, because that is my personal target in Netflix, and I don't fight personal targets. So I have currently a short position Netflix, $445, corresponds in fact today to this price where the stock has been trading. And this chart also, here you can see that the difference between the current price and the first support is significant, okay? And in my opinion, the first support, technically speaking, I repeat, technically speaking, it is this line. But for your knowledge, and this is also critical, this stock will remain in a bull market, while a pivot that I'm going to tell you here, it continues to be support pivot, and that pivot, I'm going to type it here, is 309. Okay, while this pivot, this price 309 remains as support on a long-term basis, this stock will remain in a bull market. Ladies and gentlemen, today we are publishing other case study, once again in this company Netflix, and I'm going to explain the miracle behind the GTR, Ultimate Driving Performance Trading System for investors and traders in the stock market. Netflix, if you want to know why the stock crashed in 2014, I'm referring to the crash $430, $450 all the way down to 309, and the reasons behind the recent rally on the stock, more than $110 per share since the 309. It is addressed all in advance. I repeat, all the instructions, the pivots, they are addressed in advance. All this was called in live in our video portal, where we announced to have live trading calls worth more than 100 million proven net profits in the stock market. All this has been addressed, I repeat, recorded live in advance. And here you find for Netflix earnings call and long-term outlook, and Netflix stock outlook 2014. So on these videos you find here instructions how to trade and invest in Netflix, and you just had to click and to rent the lesson, and if you did it, then it is very well explained why the stock had to plunge to 309 and why then at 309 the stock had to rally, as you could see in the past 4 weeks, to today price 420. Bear in mind, this stock was called, this company Netflix, the single best investment in the world at 52.86, and you find in our blog website more than 100 articles and several case studies addressing Netflix. So congratulations to all of you that have been investors in Netflix, but also knowing when to take profits, and also if you wanted to profit from the short side, you also add instructions when to do it. Having said this, I'm going also to explain, besides the case study in Netflix, we made an important announcement in the website, and we announced this service that is currently our top service, the GTR Ultimate Trading Performance. And if you want to have an example of the GTR, you can play this video, and this is just one example using Twitter, the stock bubble from $73 all the way down to $30. And if you want to know more about GTR, you can see it here, a live trade call explaining that Netflix to be precisely the best stock to have and to invest in for the coming years, after the collapse, obviously, after making the most on the short side in Netflix. I'm referring to the crash, $300 all the way down to 52.86, a call that was recorded live, and a price that I visualized as a long-term bottom in Netflix even before the shares traded down to that price. And then Netflix to become the single best stock in the world, or the single best investment, and shares they gained 1000% since then. So all those that they have been investors in Netflix, they had the opportunity to make it, and therefore you didn't need anything else, as I addressed already several years ago. So these are examples of the power behind the GTR, the Ultimate Trading Performance, the best trading system in the world. And I'm going to give the example of the other one, stock, and just to show you how simple this is, and this algorithm performs miracles. Recently, our partner, Beyond Trading, reported a very important upgrade in shares of this company, Sears Holdings. Sears Holdings, that is one of the most hated stocks in Wall Street, for your information. I'm sure that you are aware of it. So Sears Holdings, that no one believes, and you can see here that Credit Suisse issued recently a downgrade pre-market, and the stock, the shares, they were trading at $35. And in fact, I shall say that Credit Suisse already downgraded Sears Holdings. This is not the first downgrade, they already downgraded Sears Holdings in February when the stock was trading near the bottom. Therefore, that was the bottom basically for Sears Holdings, and Sears Holdings that it has been one of the best performers among retail investors companies in the US. And this despite the heavy losses that the stock or the company, has seen. So the company reported one of the worst, if not the worst, earnings in among US companies, and shares of this company, they have been rallying, as I'm going to show you, despite Wall Street downgrades. And this is the rally since February 2014. Shares have been rallying, and therefore earnings, they have not had any impact whatsoever in shares of Sears Holdings. So despite the horrible earnings, the shares, they have been rallying, and therefore all those Wall Street analysts, including retail newsletters, that they have been calling Sears Holdings a drop of 50%, they have been wrong about it. And therefore it is explained in our blog here why investors should not listen to barons. And here you have the explanation why you should not listen to barons, because I'm still, after 20 years in stock market, to find one retail newsletter in the US that actually made a good call in the market. I never seen one, so I'm still trying to figure out one. Be it barons, be it the Motley Fool, be it whatever, Zacks Investment Research. In fact, you have here a great opportunity to become a millionaire investor in the stock market by selling short Zacks. So what did you have to do to become a millionaire? To sell short Zacks. How to sell short Zacks? To sell short one of their strong buy opportunities, and here you find one of their strong buy opportunities, and the stock melted all the way down to my price target. And this stock, obviously I'm referring to, you just had to rent the lesson. So here you click, and for this price, the stock melted completely all the way down to my target price that I announced, and then gave origin to a case study. So I don't see why this should be complicated, and I'm just trying to help you to understand that these stocks like Sears Holdings, they are going down when professional investors consider that it is time to go down, and not when you believe, or barons or any other retail newsletter believes that they are going down just because of the metrics or some formula that they have, because they don't know anything about trading or investment in the stock market. So here I finalize by saying that this case study demonstrates in 3 stocks, or 4, just or 20, you just have the case studies there, and we are publishing case studies every single day basically. The ultimate trading performance: Netflix, Sears Holdings, and Twitter. Just 3 recent examples, and we are going to publish on this weekend more about Yoigo, more about Yelp, more about LinkedIn, and so on. So congratulations to every single investor, and a great case study in Netflix, one of the best investments ever in the stock market, with a sell-off, an important correction all the way down to a pivot very important that I announced, the 309, and then in a matter of 4 weeks, a great rally all the way up to 420 today. So you just have to sell, lock the profits, my friends, and you made your year in 2014. You don't need anything else. Thank you, congratulations.